Welcome to the Remarkable Retail Podcast, Season 2, Episode 6. I'm Michael LeBlanc.
And I'm Steve Dennis.
And this episode is brought to you by the Poirier Group. Well, Steve, it's a solo episode today, and I wanted to delve into the new book coming out. So you've got a new second edition of the book coming out, and we're going to cover off some of the new sections, some of the new content, and I've been really looking forward to this episode, actually, because, as we've talked over the past number of episodes, you wrote the book just prior to the COVID crisis breaking out. Some things were just endemic to the industry and other things have changed. And it's one of the questions I love asking my guests on our interviews. What's an adjustment versus what's permanent change versus what's just more of the same continuation. So really looking forward to it. So what are you going to do to, can I get a copy of it now? Can I pre-order it? Give us a bit of that 411.
Sure.
What is it? March. It's March. It's March already. So TikTok.
Yeah, it's coming up fast. Well, actually, we have a special promotion we're going to do for our listeners. If they want to see the new edition prior to April 13th, all they need to do is pre-order the hardcover from any place books are sold worldwide, and then email us the receipt, and we will send them the ebook version a few weeks in advance so they can get a jump start on that. So they can just send the email confirmation to books@sageberryconsulting.com. We'll put more of the details in the show notes. And then once we get that, we will email them back an ebook file for Kindle, Nook, Kobo, all the different formats.
Fantastic. Now, do you want them to put something in the subject line, like heard it on the podcast or something like that?
In the subject line, if they could say podcast offer, just so we know where that came from, that would be great.
Well, you're a good performance marketer, so I would expect no less.
We got the attribution team just ready to do all the analysis.
Well, fantastic. Yeah, so all that information will be in the show notes, so be sure and take advantage of that. So, before we jump into kind of talking about the contents and what's different, I guess I kind of answered the question in my introductory comments about why a second edition so quickly after the first edition. And ordinarily, retail changes, but not that much. But really, the COVID crisis has really upended. And I guess it really got you thinking about answering that fundamental question, right? What is different and what do we need to be thinking about as we pull out of this?
Yeah, when I get the question about why do this new edition so quickly, I guess the first thing I say is, well, really, the core principles of the book, the first edition of the book are really the same, which is that fundamentally very good is no longer good enough, that you have to be remarkable. And so for the most part, all the reasons that went into that fundamental premise are pretty much the same. The 8 essentials framework, which makes up the second part of the book, it's the same 8 essentials. But, a lot of what I was talking about in the book, the first edition, as you recall, was how disruption was accelerating and that it was getting harder and harder to carve out a place in the unremarkable middle. And that I was really encouraging retailers to transform very, very quickly. And as I think we talked about in an earlier episode, I guess, and obviously there's lots of different situations retailers find themselves in. But if you weren't changing fast enough, I thought, well, maybe you got 3, 4, 5 years to get this done. Unless you're already in bankruptcy or something. And then just COVID came along and accelerated so many pieces of that. So number one, the playing field is just fundamentally reset. Number two, some of the advice that I gave was like, well, too late, basically. So I really wanted to kind of reset the point of departure, so to speak, and then go forward from there, which is just a different place.
Well, it's interesting about what you talk about, how much time you actually have, right? Because we've watched Sears in the U.S. I think you described it as the longest liquidation sale in history. They ripped the Band-Aid off here in Canada really quickly, but it takes years and years and years to unwind. But when you lock your stores down and people fundamentally change their consumer behavior, even buy less apparel, that's gonna transform that timeline just massively, right? That's that external shock that if you weren't ready for it, and that's the other interesting side of the coin, I think. When I talk to retailers who were, who were ready for it, like they were in a position. Some of it was bad luck, good landlord, bad landlord. Sure. In a mall, you're in a mall that relies on commuter traffic and office workers. It's not good. It doesn't matter what or who you have in terms of talent running that business. It's tough. But for others, they were ready for it. They were already doing the right things. They were, trying to be remarkable, and it felt like they had a big lead start, either in surviving it or about to, prepare to come out of it. Would you agree?
When you look at the winners and losers of the past year, you certainly have a big, to your point, you certainly have some of it very much driven by, particulars of the location, the sort of categories that could keep, that were stronger digital categories or were essential categories and so forth. So that's absolutely a big force. But even within that, I think the retailers that really adopted, what I call this harmonized approach that had strong digital and physical capabilities well integrated, that helped them a lot. If they were already good at some of the digital analytics, that really helped them a lot. So not all the success is just the folks that, pivoted really quickly or just kind of the luck of the draw.
So back to the tradecraft of the book itself, how much would you say is new? We're going to talk about an entire new section about the 6 new forces of the COVID economy, but and you've said that the 8 essentials remain essentially the same. Who knows? Maybe some are more table stakes now than they were before. But how long did it take you to get into this and to craft that and give us a sense of scope and scale 1 versus edition 2?
Sure. Well, I don't know that I can give you a good percentage other than say quite a bit, but I can point to a few things. Well, first of all, there are a couple entirely new sections. There's a new foreword by Sucharita Kodali from Forrester. There's an entirely new introduction. And then there's several of the chapters that are significantly revised, but also there's a bunch of new content. So the book itself is actually went from, I think, like 215 pages to 260 pages or something. So it's about 20% longer. So some of that is, yes, the new content, and some of it is just, kind of massive revisions.
Well, you took a big bet. We were talking off mic about the vaccine. And if we were just saying, can you imagine having conversations like this, or the industry having the conversation without the vaccine on the horizon? Now I actually think the book is, second edition is even more valuable because you can actually activate on the book in 2021 and 2022, thanks to the vaccine. All these things will pass, in other words, but the book provides such great guidance, informed by the COVID crisis, and not just the basic fundamentals of things like your 8 essentials.
Yeah, well, I certainly hope so. I guess, the other thing is that you can't, I guess a few people can do this, right? But you can't really write a book with the idea that, this is going to be read, the first week of May, right? Because some people will read it right away, and other people will put it on the shelf and get around to it. And so, I wanted to make it of the moment in that it reflects the major forces and some reasonable, educated guesses about what the future might look like. But it's not a current events book per se. It's a long-term strategy book that really just, reflects what's transpired in the past, year or so.
Again, that circles all the way back to, what's different and what do you need to do to adapt to COVID versus what do you need to think about post-COVID and structurally. That's where I think the book really shines. All right, well, listen, let's dig into one of the new sections. Really, what this episode is about is the 6 new forces of the COVID economy. So let's start. Take us through about these 6. Let's start in with Bifurcation 2.0. What's all that about?
Well, some listeners, I imagine, will know that I have said bifurcation more times than perhaps any other word I have said in the past year, other than maybe unprecedented. It's an unprecedented pivot. Yeah, that's good. Yeah. But well, for those who know about that and those who don't, I've been talking about retail's great bifurcation for a number of years, which was really this idea that success was being found kind of at either end of the spectrum, really more on the kind of value, efficiency, speed, convenience side, and at the other end of the spectrum, more kind of high-end specialty concepts, and that those retailers that were kind of stuck in the middle, weren't strongly in either direction, those that were the ones that have been getting into trouble for many, many years. And, that's frankly where we've seen the vast majority of store closings or bankruptcies. The reason why I say bifurcation 2.0, just kind of going back to what we were talking about before, was, COVID just put even more pressure on these retailers because, they had bad capital structures, or they were already in bankruptcy or on their way to bankruptcy, or they just couldn't pay the bills on a lot of their stores, and so they were forced to close a lot. So I don't know that the fundamental consumer behavior of tending to want to spend at either end of the spectrum is that different. It's just there was no place to hide. So the collapse of the middle, I think, is, it's been accelerated, as we'll talk about in a second, but going away even faster than I imagine. The other thing that's part of bifurcation is what's going on economically, which has been driving some of this bifurcation, which was, unfortunately, well, I guess it depends on where you sit. But, one of the things that's kind of weird about COVID, is as disruptive as it's been, is that the stock market's done really well, incredibly well. Real estate in most places has gone up. And so those people that have a lot of assets that are heavily invested in real estate and or the stock market have done pretty well. And if you were employed making a nice salary and you didn't lose your job, you've got a lot more discretionary income. On the other end of the spectrum, the folks that have no real participation or very little participation in these assets, they didn't benefit from any of that. And that, and I think in a lot of markets, certainly in the US, the amount of unemployment has been disproportionately harder on the, say, bottom 25% or so of the market. So you've got this split of economic outcomes. And so the rich, they got a lot more money. They're driving a lot of spending, particularly on higher end stuff. And the folks that are, struggling to make ends meet are tending to shift more of their spending to the lower price, more value-oriented retailers. So it's really just creating this polarization or bifurcation at a whole nother level. So that's what I mean by bifurcation 2.0.
It's really amplifying something that we were seeing before, this spread of wealth, the end of the middle class, so to speak, which is connected to the end of the middle. And it is worrisome. I think, when I speak to retailers at the value end of the spectrum, they're worried because there's probably, I saw a number in the US, 20% unemployment at the lower household income levels.
Right, exactly.
Like it's massive. And that's not going to turn around until services come back. And that's not going to be a flick of a switch, despite the miracle of the vaccine. So it is worrisome, I think. That being said, NRF's numbers published forecast for 2021, they're calling for huge growth, driven by all these other phenomena, like the buying stuff for your house and not traveling, and it's all, a lot of it's finding, not going to restaurants, a lot of it's finding a way into the retail. So interesting. All right, let's talk about an accelerating acceleration. I practiced to say that, actually. So
I didn't want to call it the Great Acceleration because our friend Carboutet and some others have used that, but it's kind of the same idea. But a big part of the first book and what I've been speaking about for the last few years is that so many trends have been accelerating. The disruption is happening at an ever greater pace. But then we get into COVID and it goes, to a whole new level. So some of this is, e-commerce was growing 14, 15, 16% a year. Now it's growing 25, 30, 35%. Some technology like contactless payment, buy online, pick up in store, live streaming, you kind of go through the list of technologies that people have been talking about having an impact. And, the adoption of those technologies has been accelerated by multiple years. And so, the one that I think it gets a little bit more like people act as if it's kind of a new thing where it isn't, is really the blurring of the lines between digital and physical. I mean, we've talked about that multiple times here. I've been talking about it forever. So I think that's really more retailers waking up to it, the ones that weren't ready and were sort of forced to. But anyway, I think almost every trend has been massively accelerated. And, the big question is how many of these, will these growth rates be maintained, or will we see some settling down, which, I think we will for sure. It's just a question of which areas.
Yeah, it's literally the multi-billion-dollar question. We saw acceleration here in Canada, 70% year-over-year growth in e-commerce. We were a few years behind, and it's a global phenomenon. So it really is unique in that way as well, right? All countries suddenly reset to have this great acceleration. Number 3, reallocation and the redefinition of essential. Yeah,
so we started to touch on this, but we've seen this massive shift in how people are spending their money, obviously with people not working in an office so much, commuting expenses, gas, et cetera, has really dropped. Nicer apparel, both because of work reasons, but also, not going out, not traveling, has declined considerably. People aren't spending on vacations for the most part and so forth. But then we've seen this big investment in things related to work from home, like office equipment and so forth, but all the home upgrades, much more eating at home, working out at home. So this very big reallocation, as we talked about earlier, is affecting different retailers differently. The big question again is how much of this will really persist as we get into more of a recovery. I mean, I certainly think that on the one hand, people will be very eager to get back to traveling and get back to, entertainment out and eating out and so forth. So maybe it's the work from home piece that will kind of keep this reallocation at a heightened level.
We'll be right back. This episode of the Remarkable Retail Podcast is sponsored by the Poirier Group. Do you want to move faster, streamline your processes, and have larger margins? If you're a retailer in 2021, chances are you do. The Poirier Group's award-winning team of industrial engineers and performance improvement experts specialize in driving results for retailers and grocers across North America. From reducing call center wait times to improving stocking and replenishment processes in warehouses to seamlessly integrating IT systems and more, they are your trusted partners you need. TPG doesn't just design solutions, they leverage years of actual industry experience to implement them and set you up for long-term sustainable success. Just ask their clients. Over 15 years of business, 100% positive review. Visit thepoiriergroup.com/remarkable to learn more today. Yeah, that last part, I think, is one of the longest lasting implications because the work from home wasn't really there wasn't a lot of momentum for work from home pre-COVID. It existed, but I wouldn't call it momentum, outside of the tech companies. And even within, there wasn't a lot of buzz about it, so to speak. But now and it has tremendous implications. And it has implications and brings about your fourth one, which is power consolidation and the last men standing. What's that about?
Well, a couple of things here. One is, related to the reallocation and the shift from online away from physical is that, this whole collapse of the middle is that a lot of the retailers that were on the ropes are going out of business or closing a ton of stores. And so as those, it's probably easier to think about it in terms of, mall anchors, right? You've got all these JCPenney stores, et cetera, that are closed. So, some of those categories have been shrinking for a while. Some of them are very contracted during the COVID times, but presumably will start to come back. But, that volume is going to go somewhere. So as these retailers go out of business or they close a massive amount of stores, then presumably that market share is going to be claimed by the more powerful, better retailers in the space. So I think the rich get richer, so to speak, in the business design model. So we'll see this market share consolidate around the stronger players. I think the other part of this consolidation is, as we've already started to see, and I think it's actually going to pick up pace a lot, is a lot of acquisitions, or, whether it's acquisitions of weaker players or acquisitions of, we've seen this couple companies that have been buying up essentially intellectual property and relaunching, like Pier 1's been or is about to be relaunched as an e-commerce platform. So you got these powerful players with a lot of cash, strong balance sheets. You've got a bunch of other players that are very weak and might get sold out of bankruptcy or at fire sale prices. So I think in some categories, probably like the department store category, you may have 6, 7, 8 players today. My guess is in a couple of years, you have 1 or 2. There's just not enough business to go around in some of the more contracted categories, or the ones that have just been weaker over the longer term.
So I guess I hinted at this next one with when I started talking about work from home as a thing and a permanent, but you call it rewiring, basically the great rewiring, and I can see that in key industries. But I think there's a lot going on, whether it's travel or how does that extend into retail as you think about the implications of some of the more broader, longer lasting consumer behavior impacts.
Yeah, so I borrowed this term from Rashad Tabakawala, who wrote a blog post called The Great Rewiring a few months back. We had Rashad on last season. And he makes the point around a number of different areas where things are, he would argue, forever changed. So work from home is probably the biggest one. More entertainment from home, maybe more eating at home. Will there be as much business travel even when we get post-COVID? Because maybe we've learned that, man, it just takes a lot of time and money to go fly across the country to go see that client.
We've relearned that one, right? I mean, you and I lived through 9/11, and that was coming out of that. It was like, hey, I don't really need to do all this business travel, but it bounced back with a huge. But maybe this time is different, right? Because this affects everybody all the time, right?
Yeah, I think that's the hard thing. Like, I think it's very easy to get your head around work from home being a much bigger factor. I have a harder time believing that leisure travel, I think there will be people that are just dying to go travel again once it's safe and if they have the money to do so. But business travel, I have a lot of questions about. I think as people have, bought their Pelotons and started working out from home, does that really keep the fitness industry, the kind of traditional health club business, is that going to be forever changed? What's going to happen with restaurants? Again, I think people will be very excited to go back out and eat in a nice restaurant. But, we've also developed some new habits about cooking at home. Entertainment, unfortunately, a lot of arts organizations have gone out of business or are really serious trouble. So I think it remains to be seen precisely how this will play out. But I certainly think, to your point, like, this is so massive, has affected so many people for, what's going to be a good 18 months, right? Before we're back to any some semblance of whatever you want to call normal. So I think it's hard to predict exactly the way this plays out, but you've actually got to be thinking about it, I think, pretty carefully and starting to take action to position yourself for that.
Well, two quick comments on the business travel. I talk to a lot of merchants who are loving having their merchandising group not have to travel the world to find vendors and meet with vendors. Now that you need once in a while to go see, and you don't want to buy products from a hotel room. You want to go see them made and everything, but they're really loving that because that was a real grind part of being a merchant, right? You're on the road, particularly early in the year to China. It's a long trip, and it's a long way to be away from the family, and it's expensive, right? These things, there's an economic benefit, which is there. And a quick comment on the restaurants. It's been interesting. I've been thinking about talking to some restaurateurs, and they're saying, listen, consumers are going to be different. They're going to be more educated. Their expectations are going to be higher. So as much as they want to get out and experience restaurants, the general feeling is for many consumers, there'll be a bigger number of those consumers who are just way more discerning and say, I could have made that at home. So I think it's going to force them to up their game. And a lot of industries, I think, will have to figure this out as we kind of go along. Last one, hybridization.
Yeah, so this is the one. So when I go back and look at the other five, I think in all cases, I could make a pretty compelling argument that whatever we have seen during COVID and, what we're likely to see for the next few months will start to moderate. I can see it pulling back. Hybridization, I think, is the trend that will be accelerating for the foreseeable future. And so what I mean by hybridization is really this idea of the blending of various things. So for the most part, it's the blending of physical and virtual in more profound ways. So one way to think about it is the hybrid role of the stores. We touched on this in a prior episode about how, for the most part, stores were places to go buy things and take them home with you. Now, over time, obviously, as e-commerce has been growing, the role has changed. But what COVID did was start to really put more pressure, I guess you could say, on the role of the store being a fulfillment hub, right? So whether that's buy online, pick up in store, or curbside pickup, or e-commerce order fulfillment. But I think also as people are really taking a hard look at real estate costs and maybe shrinking their stores, there's more of a showroom component. On the other end of the spectrum, I think, with the commoditization of a lot of retail, you're going to see certain retailers that really want to invest in, for lack of a better term, the kind of more theatrical or demonstration aspects of retail when things are safe. So I think the role of the physical store, which has been absolutely changing for many, many years, is really gone to a whole new level. The other hybridization is really more around format deployment. So certainly you have plenty of retailers that, the conglomerates that might have different sort of formats, Old Navy, Gap, Banana Republic. But what I think we're starting to see is, say with Nordstrom Local or even with Apple, Macy's, and some others that are creating new, smaller formats to perform a different sort of function, perhaps, more of a pickup location, or be more tailored to a local market or a micro segment. And so I think when you start talk about some of these brands, it's not going to be, there's just this one flagship version of the store. There'll be many more iterations. And so maybe as retailers close some of their bigger stores because as more stuff moves online, the economics don't work as well. They'll actually create smaller formats, which will be fulfillment hubs or pickup hubs or service centers or what have you.
To kind of wrap it up, or to wrap up the conversation, I want to ask you this question. So when you sit with your clients and or imagine yourself, with a CEO of a company and say, listen, to be able to thrive in the post-COVID economy, your organization needs to be different somehow than it is today. What would one or two of those things that they need to be better at or different than pre-COVID? Other than reading the second edition of your book, of course, step one.
Right.
But fundamentally, I think organizationally, culturally, what do organizations need to be to thrive post-COVID?
Well, the things I'm going to say are, I think, all things that have been important for a while. They're just amplified. So number one is agility, right? I mean, you just have to be able to respond much more quickly. Not necessarily because I think there's going to be another pandemic, but who knows? Right. But technology evolves much more quickly. Consumer preferences change much more quickly. The competitive playing field is constantly changing. So I think you have to build a lot more agility. You have to be much more invested in a culture of experimentation. And I think, again, another old idea, but I think you have to really go much deeper on understanding customer behavior, because the kind of one size fits all, or even, a few sizes fit many orientation of a lot of particularly big retailers, just hasn't served them very well. A lot of big retailers have missed interesting segments because they took too much of a, average kind of approach to the market. And I think particularly as some of these new technologies come out, figuring out which ones are going to be adopted, which ones are going to be just like the, flash in the pan or whatever is harder and harder. So if you don't have that level of customer insight and you don't have a test and learn culture and you don't have the agility to respond built in, you just can lose a lot of market share pretty quickly, as we've seen.
And we're back with another remarkable or forgettable. Steve, let's kick it off with Target. Blockbuster earnings. What do you think?
Well, it's hard not to look at the earnings and not say they're pretty remarkable. I think something like they had more incremental revenue in the past year than they did the last 10 years combined, or something crazy. Digital sales were blockbuster. I mean, pretty much firing on all cylinders. So, pretty remarkable. I think the other part of what they talked about was this big investment they're going to make in their stores and fulfillment capabilities more broadly, which I think really speaks to some of the stuff we've already talked about, is this even more blurred world and how important stores are becoming in fulfilling the whole customer journey. So, very remarkable. I think the key thing to watch going forward is going to be, it's going to be a lot harder for them to post these kind of numbers as physical retail starts to open up more, and there's just more spreading of consumer spending, and less government stimulus and things like that, which they warned about. But pretty impressive.
Yeah, I think all retailers are going to have weird comps, right? Because it's hard to comp off a rush on toilet paper. News from Disney, which it actually took me a little bit off guard, but they've been doing some strange announcements about movies on, where do movies play, and talk about what their plans are for stores.
Well, they announced they're closing a bunch of stores, I think about 20% of their store count. And it's a little bit curious, again, something we talked about a lot, but I think the way they talked about it seemed to be very much about thinking about online and physical retail as separate things. And I think we've learned pretty strongly that that's a bad way to think about it. And, to me, anytime you close stores, you're making yourself less customer relevant. Now, I don't have enough access to their data to know whether or not they could close some stores or relocate some stores. But it's surprising to me if you've got a strong brand that you would, and particularly as physical retail starts to open up more, it's a little interesting to me that they would close so many stores. So remarkable in a bad way, perhaps.
Yeah, and I've found them entirely, when I've been in their average store, unremarkable. I mean, there's just pile high, let it fly kind of merchandising, and which seems to me always to be a miss in terms of the experience. So I don't know, maybe you'd think they would, amongst all people, would get experience right a little bit more than others. Let's talk about ThredUp. So they're getting ready for an IPO. There's this big talk in the industry over the past years that the reuse market is bigger than fast fashion in 10 years. Of course, that's all by the people who, like ThredUp say that. So I don't know how much there is behind it, but what do you think about that market, and what do you think about ThredUp going in the IPO market?
Well, the resale market, like all of apparel, has certainly been pretty tough the last year. But yeah, it was a hot category going into the pandemic. I think there's certainly reasons to believe that it's going to grow a lot as we get into 2022 and beyond. I think some predictions of the market, tripling or quadrupling in the next 5 years. A ton of competition for sure. ThredUp's a little bit more mid-price than some of the other guys like Real and Vestaire. Also companies that have gone to the public markets and raise money. So a lot of money going in, a lot of interest in the category. The thing I think that's really, so I think it's remarkable in that, there's going to be a lot of activity here for the next couple years at least. The thing though that's so vexing, even when you step back from the impact of the pandemic, is all these guys are losing a ton of money. And so you can get it from the impact of the pandemic, but even before the pandemic, I think Real's operating margins were like negative 40% or something, but Poshmark and others are all losing a lot of money. So, it's hard to imagine how all these guys, even with the growth that they may start to get, are going to be able to make it.
Well, it seems they're paying attention to unit economics, because I was reading some of the documentation behind the IPO, and they're talking about their model changing to almost like 70 or more % consignment, which means they don't have to outlay a lot of money. They're just become a facilitator. So I think that has changed in their model, whether that's, looking at we need to firm up our economics, or that's just what customers want to do.
Yeah, ThredUp too is also much more of providing a service to other retailers. So they're partnered up with a bunch of retailers. So I suspect part of what helps them is that it's really the retailers that are bearing the customer acquisition and some of the marketing costs. So that may put them in a bit better position, but their lower price points also make the unit economics tougher. So I don't know. I mean, it's pretty hard to evaluate this right in the middle of the pandemic and just with it so early, but certainly a hot category and one to watch.
So let's talk about Nordstrom and this company Tonal, which is kind of reminds me of Mirror, which is a high-tech at-home exercise. Mirror was invested in by Lululemon, now completely owned by Lululemon. We know Peloton is hot. And talk about this. What's up with Nordstrom and this brand?
Well, this is too early or too small a scale, I guess, to give it really a strong remarkable. But I think it's pretty interesting, both in general, the number of partnerships we're seeing between big retailers and some of these up and coming brands, which I think really can be a match made in heaven done right, because retailers, and in Nordstrom's case, they get to partner with a brand that maybe gives them some better credentials in the fitness, athleisure related category, maybe attract some new customers, drive traffic to the store. So I think there's a lot of advantage, just differentiation. Sure. So I think a lot of things that are good for the retailer, and then for these smaller brands, it gets them a ton of exposure and lowers their acquisition costs. So I think this overall trend is pretty interesting. And Nordstrom's been pretty aggressive of partnering up with some of these newer brands. So it's not really a change for them. It's but this is a little bit getting them more into a slightly different category rather than kind of pure fashion.
All right, a couple other quick things. I guess the folks from Saks weren't listening to our podcast a couple of episodes ago, because they've gone ahead and done the thing. They've gone and spun their e-commerce site into a separate business, which boggles my mind a little bit. But talk about it briefly for the listeners and the folks at home.
Well, it's just dumb. I mean, it's very opportunistic in terms of, I guess, raising money because there's these high valuations for fashion e-commerce companies, but it is so anti everything we've seen about what makes retailers remarkable in terms of integrating the customer experience and leveraging data and all, everything that has been important as an underlying trend, this goes against. So they've got a bunch of contracts, I guess, to try to coordinate better. But, in essence, they put their .com business in competition with their stores, and that's just a really bad idea.
Anyway, all right. Well, that was another episode of Remarkable or Forgettable. We'll be back next week. Listen, let's bring this episode to a close. We'll get back next week to more great guests to lend us their insight and tap into their wisdom. But for now, Steve, take us home.
Well, if you like what you heard, subscribe on your favorite podcast platform so you can catch up with all our great interviews and insights, and new episodes will show up every week. And please take a minute to drop us that elusive 5-star review. I'm Steve Dennis. The expanded and completely revised second edition of my best-selling book, Remarkable Retail: How to Win and Keep Customers in the Age of Disruption, is out in April. Pre-order your copy right now at Amazon, Indigo, bookshop.org, or just about anywhere else books are sold.
And I'm Michael LeBlanc, producer and host of the Voice of Retail podcast, and you can learn more about me on www.meleblanc.co. Have a safe week, everyone, and Steve, talk to you again soon.